Insurance is a good news, bad news story. On the one hand, pure insurance is very important and a very useful part of a person's financial plan. On the other hand, the insurance industry in the United States is a bit of a throwback to the days when financial services and utilities were heavily regulated. The situation in the insurance industry today is somewhat like AT&T before telecommunications deregulation. AT&T was a regulated monopoly which prohibited competition, limited innovation, and set uncompetitive prices. Had AT&T not been deregulated and broken up, it's very unlikely that we would have cell phones or the internet today. The insurance industry in the United States is actually 50 mini-industries, plus a few more for territories like Puerto Rico. The National Association of Insurance Commissioners provides standardization, but the type of coverage that you can buy and its cost is determined state by state. In each state, the legislators, the regulators, and the insurance companies decide among themselves what to allow and what to charge. If you register a car in a particular state, for example, you can buy insurance for it only in that state. And from state to state, the differences in auto policies are significant for the same driver and the same car, for no better reason than that there is different regulation. Health insurance is probably the most egregious example. In many states, it is essentially impossible for an individual to buy health insurance because state legislators and regulators have put up so many obstacles. The availability of health savings accounts varies widely for the same reasons. Some states impose as much as a 5% tax on insurance premiums, others none at all, and so on. Nonetheless, insurance is very important, and it is usually possible to buy insurance that suits the need of your situation at an affordable price. It's just made difficult by the fact that insurance planning differs so much from state to state, and by the fact that information about fees and the operation of the policies is very difficult to get or to understand once you do get it. What I mean by insurance per se is insurance that insures you against a risk and does not attempt to serve any other purpose as well, such as investment or tax avoidance. A typical person's insurance opportunities fall into 5 categories: pure insurance, health insurance, Social Security, and the investment and estate planning aspects of life insurance. Annuities are also part of the insurance industry. In this presentation, I want to talk primarily about pure insurance. The fundamental idea behind insurance is that if a group of people who face a similar risk get together and pay a small amount into a pool, those few of them who face a loss can be covered from the pool. If you don't have a loss, you get nothing for your premium, but you're willing to pay it because you know that you can collect if you ever do have a loss, which might otherwise bankrupt you. Over the past century or so in the United States, the insurance industry has worked with Congress and the courts to create tax advantages for itself, which have been used to create so-called variable products that are sold as investments similar to IRAs and other tax-advantaged savings accounts. I'll talk about these products in another presentation. Here I want to discuss just insurance that helps people to protect themselves from risks. We might call this old-fashioned insurance. But whether old-fashioned or not, this sort of pure insurance is a very important part of everyone's financial planning. Pure insurance for individuals consists of the following: term life insurance, homeowners insurance, auto insurance, liability insurance, which is also called umbrella, and disability income insurance. In each case, you hope that the loss, which would be early death, fire, car crash, lawsuit, or disabling accident, you hope that the loss doesn't happen, but because of the cost of having such a loss is so high, you are willing to pay something every year to cover yourself in case it does happen. Sometimes a minimum level of insurance is required for a lender, for a mortgage or something like that, but that is for the lender's benefit, not yours, and so I don't include it here. In general, the best advice is first, get a policy with a high deductible and an inflation rider to keep the premium low and to ensure that the coverage keeps up with inflation. 2, behave in ways that reduce your risk, like seat belts and keeping paint cans out of the house, and don't make claims for every little thing. And then finally, review the policy every few years. Most people are inadequately covered, either too much or too little, and often a combination based on different policies. This is an area that is easy to forget once you've made the initial step because most people don't face losses very often. But it is wise to review the details carefully to ensure that you are adequately covered at the lowest cost. The losses covered by pure insurance can be catastrophic, and it is important to be sure that you are protected. Group insurance provided by an employer is well worth considering because the qualification process is often easier than for individual insurance, and the premiums may be lower. Group life is frequently offered, and many employers offer group health and disability insurance. On the other hand, group insurance coverage may not be sufficient, which may drive you to consider supplementing it with individual insurance. Plus, you need to consider the value of independence. Being tied to an employer because of insurance coverage, or being unable to qualify later in life when you leave an employer, are serious considerations. Sometimes group insurance has a conversion option, so that you can retain the insurance after you leave an employer. This is often not the most cost-effective way to get continuing life insurance, but individual health insurance may not be available any other way, and you should look into the requirements for continuing your group health insurance even if you're not concerned about losing your job because it is so important. The best way to approach pure insurance is to sit down and to list all of the areas in your life that are at risk, to methodically work through all of your needs, and then to investigate your options with the help of a reputable insurance agent, of whom, in these areas, there are quite a few. This may seem a boring nuisance, but it is always well worth the time, and most financial planners will start here when helping their clients because the effect of a loss, which could well be catastrophic, is often so easily protected against with a little planning. Increasingly, the Internet is facilitating the creation of discount pure insurance companies in competition to the insurance companies who have commissioned agents. While the cost of agent-sold insurance is higher because of the commissions, you need to consider the fact that major losses have a significant emotional component, and doing business over a number of years with a person in your neighborhood whom you know well and who will offer to help is more than just a sales pitch. For pure insurance, choosing a good agent can be as important as choosing a good policy.